A new trading week is about to kick off right behind me here at the New York Stock Exchange. And after last week's seesaw action, investors are trying their best right now to figure out exactly what direction will the markets be heading in during this upcoming holiday-shortened trading week. Because last week was all about the battle of inflation versus strong earnings report. Yes, inflation woes continue to grow in the United States, with prices rising the most in decades, especially for fuel and energy prices across the board. In addition, COVID concerns returning, with Austria announcing a full national lockdown on Friday, and Germany unveiling more restrictions for the unvaccinated. However, according to Refinitiv, with more than 90% of S&P 500 companies handing in their financial results for the third quarter, over 80% of them reported earnings that were better than Wall Street expectations. This with S&P 500 companies on track to grow profit by 41.5% year over year. This all paved the way for a mixed bag of results, a mixed bag that may carry over into the upcoming trading week, the upcoming holiday shortened trading week with the Thanksgiving holiday on Thursday. Now the question is, are we going to see more gains? Will we see more losses? Will we see steady trade? Let's now take a look at what will likely move the markets in the week ahead. Now we kick off the week on Monday in China with the People Bank of China's interest rate decision, that of which currently sits at 3.85%. All right, here in the United States, we will see the release of October Chicago Fed National Activity Index, as well as the October existing home sales figures. Existing home sales expected at 6.2 million month over month. Now Tuesday sees preliminary November market manufacturing PMI out of France, Germany, the EU, the UK, as well as the United States. US market manufacturing PMI, that's expected at a read of 59 from 58.4. Now Wednesday kicks off in New Zealand with the RBNZ interest rate decision. Expectations for the rate call for a read of 0.75% from 0.5%. In addition, German IFO business climate numbers for the month of November, they are due out. Expectations call for a read of 96.7 from 97.7. While right here in the United States, we have not only weekly jobless claims figures, but we also have U.S. durable goods orders for the month of October due out. U.S. durable goods orders for the month of October, that expected to come in at 0.2%. And that's not all, with preliminary third quarter GDP due out, that of which is expected at 2.1%. And to top off the day, we will also have the release of the FOMC minutes in the afternoon hours. Now Thursday sees us start in the nation of Germany with German consumer confidence figures due out for the month of December. German consumer confidence call for a read of negative 0.3. Well, right here in the United States, the markets will be closed for the Thanksgiving holiday. And the markets reopen on Friday, and that sees us begin the week in Switzerland with Swiss third quarter GDP due out. That's expected at 2% month over month and 2.4% year over year. Also, keep an eye on Washington, D.C. and all the political updates that have been coming out, because on Friday, the U.S. House of Representatives passed the largest expansion of the social safety net in decades, a $1.75 trillion bill that funds many of President Joe Biden's top priorities. And that bill is now en route to the Senate, where it will face some opposition as well as several revisions. And until next week, live from the New York Stock Exchange, I'm James Swinney, reporting for ICF.